Welcome to Geojit Spotlight, where we delve into the minds of industry leaders shaping the future of wealth management. Today, we are privileged to host Rahul Roy Chowdhury, CEO of Private Wealth Services at Geojit, and Amit Vyas, Head of Product and Research. Together, they are redefining strategies, innovation, and client focused solutions in private wealth management. In this exclusive conversation, we will explore their vision for 2025, discuss the global market trends, and understand how personalization, technology, and regulation are influencing the industry. Stay tuned for an insightful dialogue with the driving forces behind Geo's private wealth services. Welcome, Rap.
Thank you, Ablash.
Welcome, Amit.
Thanks, Ablash.
Rahul, how is private wealth services evolving to meet the changing needs and expectations of ultra high net worth individuals?
See, private wealth as a name has evolved in the last 10 to 15 years. Uh, what earlier used to happen is every organization had clients, right? But there were products that were very specific to India. The Western products had not come here. In 2013-14, few regulations were changed by SEBI where few complex products were allowed. What a customer needs is, or whether it's an HNI or an ultra HNI, they need to grow their capital by reducing the risk as much as possible. So, and in order to do that, you need flexibility as far as products are concerned. You also need a lot of data, right? Earlier, data was all offline. You had to scrub through papers and fact sheets in order to get information. Today, everything is moving on the digital side, right? And that is where Geojit is also going to spend a lot of time, effort, energy in order to invest in technology so that when the RMs are in front of a client, they are equipped with all possible data and information in order to give the best of advice to the client. So, I think what HNIs or ultra HNIs need is exactly that customized service, bespoke solutions with a lot of data to back that kind of solution.
Amit, have you noticed any shift in the preferences of private wealth clients, such as a greater focus on ESG investing?
See, ESG is a very, it's a nascent investment avenue for Indian investors largely. So, uh, we might not have more than $1 billion in that strategy right now, but that has evolved a lot in the developed markets. A lot of family offices, pension funds, institutional money have now a very strong ESG filter. So we will directionally definitely move in that space. But if you ask me, hardcore ESG, it's going to take its own sweet time to be one of the very hard filters in the asset management space as well. So there are dedicated ESG funds which typically follow the strict ESG guidelines, but the AUM for those fund is increasing and it's quite low right now, but that can continue to build on. A lot of informed institutional family office people now have started to look at that area seriously.
Rahul, how is personalization transforming private wealth management, and what advancement can clients expect in this area?
So, see, for first and foremost, in order to give customized service or the service that a client needs, you need to have a significant length and breadth as far as the product is concerned, right? I am sure Amit will touch base on that piece a lot. Uh, we have a complete open architecture as far as products are concerned. We have products across risk profile, across return expectation, across different kind of asset classes, both locally and globally. And in order to again provide that high quality customized approach, we have to ensure that this product proposition deepens further, uh, technology deepens further. Two products having similar kind of stocks or similar kind of portfolios does not really help in diversification. So, whatever products that we try to onboard, we also ensure that they are well diversified across their investment horizon or their investment style in order to provide the complete solution to the client.
Which asset classes or sectors do you see offering the best opportunities for private clients in coming year?
See, largely, I mean, if you ask or at a house level, we believe that asset allocation is the key driver for family wealth, right? It's very, very difficult to chase a performing asset class. But what we have realized is the affinity to real estate in ultra high net worth investors or high net worth investor is still corners a large share of wallet. And it's not just the case in India or emerging markets, that's the case precisely in developed markets as well. And if in that's pretty much in the data where your real estate as an asset class is far, far bigger than equities or fixed income as an asset class. What we are experiencing is the institutionalization of real estate in our country. In the last 7, 8 years, there has been teams which are specifically launching or raising funds in the real estate domain. So, may it be commercial real estate, may it be uh, funds raising or targeting global capability centers or GCCs, which have had a high attraction, residential real estate turnarounds. So, that space is obviously going to get traction. But traditionally, the equities corner a large part of any family's wealth. And for all the right reasons, because that's a structural story. If you pick up any data last 5 years, 10 years, 20 years, equities have always kind of outperformed any other asset class convincingly, and longer the period, the better are the odds for any investor. So in the last 20 years, we might have had just 4 or 5 instances where the calendar year returns on equities are negative, but otherwise equities have done well.
Rahul, what do you see as the biggest challenges for the private wealth sector in 2025, and how does your leadership plan to address them?
Not only 2025, I would say the biggest challenge right now in India is uh, Indians are becoming financially literate, and we are seeing a lot of money that was earlier going into into physical gold or physical real estate, moving into financial capital or financial instruments. Unfortunately, what happens in India or globally, nobody produces wealth managers, right? We produce engineers and doctors and lawyers, but wealth management are not produced, right? They are we
There's a huge course.
There's a huge scope there, and because the number of clients are growing, because the amount of wealth is growing in the country and supposed to grow for the next 10, 15, 20 years, the biggest challenge for any private wealth outfit or institution is hiring good quality wealth managers. uh, it is a challenge. It will remain a challenge. What Geojit right now is trying to do is we are going the way of training them in house. We are going to hire candidates from tier 1, tier 2 B schools, put them on a 3 month, 6 month training calendar, bring them up the curve as far as their technical knowledge and skill set is concerned, and then put them across to the clients, and so that they are equipped to provide high quality advice to the client, backed by a very strong central support from a product team and the investment team, to so that they also learn during that journey and are able to fulfill the promise that we give to clients.
Amit, how will global economic shifts such as interest rate trends or geopolitical events impact private wealth strategies in 2025?
Yeah, I mean, see, they do impact returns, and that in turn impacts the entire ecosystem. But because at the end of the day, you are a family office investor, or you are, which is informed family office investor, or a retail investor. Yeah, it's very, very, it's behavior driven, where you want to have a rare view and you want your money to be, or investments or capital to be in green. But we do have come across cycles, especially if you go back 20 years, every 7, 8 years, we have those cycles where you see certain asset classes in stress and leverages do get built up in the system. Now, interest rate is a classic example where 40 years or 4 decades, we are in that zone where the interest rates had practically come down from 12, 13% to 0% in 2009. And obviously, it remained there for a very longer period of time, right? I remember there were a few European countries or economies which were actually running negative interest rates. So we are now obviously coming out of that era. Now, what is to be seen is, yes, the cost of funds is going to be not very cheap now, because the government cannot continue to print month on month, year on year, and the deficits for all the central bankers in the world is at an all time high level, so to say, largely. So from that perspective, yes, one has to be very cognizant about the fact that you will have periods of extreme volatility as well. Since the COVID lows, we don't know what is a volatile month. So we have not seen more than 5% close on Nifty for the last 52 month except for the last 2 months where we had 10% correction. So there was enough and more liquidity that was chasing asset classes across the world. Money has gone up, and that's precisely, obviously, one of the reasons is the valuations for all markets are at an all-time high, especially US and India. From valuation perspective, we are a little expensive, not in the fair value market. So as an investor, one needs to be cognizant of the fact that these are part and parcel of the investment journey. So you will have interest rate cycles, you will have earning cycles. What is extremely important, and that is where we come in, is how negatively correlated your investment portfolio is, and how you should be able to navigate such markets where you have drawdown on fixed income products or drag on equities. That is the actually that is actually where it is important to understand that capital can be exposed to uh, drawdowns. And if you make volatility your friend, you take any period, for example 2009 drawdown of 67%, 2013 correction, 2018 correction, 2020 COVID correction. The resilience of especially Indian equities, or for that matter US equities, have time and again proved that if you actually go and buy during those periods, which a lot of people are unable to, your returns are definitely in a different trajectory. So what we believe is, one has to be allocating patient capital, and the best way to do is keep buying for a longer period of time consistently.
Rahul, are there plans for global expansion or entering new markets to grow the business in 2025?
Absolutely. So, Geojit obviously had presence in globally. We are present in GCC, we are present in Bahrain, we are present in Kuwait, we are present in Oman at this point of time. What we intend to do is we are in process of setting up DIFC, which gives us a complete opportunity to invest into products globally. A lot of complex products, a lot of differentiated products, and that offering will be available both for the Indian residents and non-residents clients of ours. The Indian residents, obviously, what they have started doing in the last 5 to 7 years, has started investing globally in order to de-risk rupee and keep some part of their investments in dollars. And DIFC is a very, very strong platform in order to provide them with that kind of facility. Uh, as far as Oman, Kuwait, and Bahrain is concerned, there also we have a lot of clients who are already HNIs or ultra HNIs with us. We are trying to put a team across over there as investment counselors and private bankers who can assist those clients and increase their wallet share with Geojit.
Amit, what key market trends do you anticipate will shape the private wealth landscape in 2025?
We are in a very interesting times right now. What we have seen in the last 6 to 7 years is the count of high net worth investors and ultra high net worth investors has grown rapidly, and that structurally is going to be the case when we enter 2025 as well. So demographic shift is at the core of the market trends basically. So when more and more people earn money, they get financially literate, they want to deploy those savings incrementally into asset classes which continue to help them compound their capital in a efficient manner. So that is going to be a structural story with us. What we believe is what's going to play a great trend is assisting this with technology. So every sphere of private wealth, right from onboarding of clients to give them very analytical, data intensive, intuitive insights through Phygital, which I mean is RM enabled and technology enabled solution. So that is going to play in very very important role going forward. A lot of wealth management companies are now going all out and building those capabilities through external vendors or in house in terms of giving that experience to clients largely. What is also now interesting is now we are looking at tier 2, tier 3 cities also participating in the game. So there are a lot of individuals in tier 2, tier 3 cities, which was earlier not the case 10 years back. But that wealth multiplier effect has come really well in these cities as well. So a lot of people have made money in real estate. A lot of first generation entrepreneur or second generation entrepreneur now are financially savvy, and they want to basically experience and create wealth through financial markets or capital markets as well. So especially post COVID, these cities have come out with flying colors, and they are looking out for solutions on the wealth management side, and they are now trying to strike a fine balance between conventional investment opportunities and the emerging, or say last 5 6 years, the new financial markets they are looking up to. What is also important is the key trend which we have picked up in the last 5 years, especially, is the alternate investment space. Traditionally, a 60-40 portfolio used to do well. I mean, 60% equity, 40% debt, or depending on the asset allocation, which is specific to an investor. Now, what we have seen is we also now have alternate investments coming into the picture. So it is largely like a 50% equity, 30% core debt. And there are investors who are now waking up to the idea that why should we not go and give alternate investments a try. Private market, which is private equity or private credit, that has been a very very you can say large wide market in developed countries. It's been around for 4 decades now. We are into that journey. We have just started that journey in the last 7 8 years. I believe structurally in 2025 we are going to get pace on that one. So if I just share data with you on the VC or the private equity market, India's contribution to Asia Pacific is now going to increase from 15% to 20-25% in year 2025. So that's going to be a key trend as well. I mean, one very important key trend which we also picked up is succession and estate planning. That is now getting serious traction with ultra high net worth families, because we have time and again seen the breadwinner not there in the family, not aware of where the investments are, and running pillar to post, aggregating the investments through various distributors, going to banks. That is something now ultra high net worth, in fact high net worth investors are looking at, so that they have a transfer of asset or transfer of money in a very very process driven way. So succession and estate planning will be at the core going into a couple of years, and that area is going to pick up pace largely.
Thank you. Thank you.